All right, greetings all. Thanks for tuning in. So let's talk about commodities and let's talk about inflation and then let's talk about some ways to make money from it. I don't drink coffee, but do you know coffee is like all-time highs? So we will look at that later. But this ETF here, the symbol is DBA, like David Boy Apple, tracks agricultural commodities: cocoa, coffee, live cattle, corn, soybeans, all the way down to cotton. Anyway, if we look at this thing, I mean, we're basically close to all-time highs here. And if we look at yeah, actually, let's go back. Oh, actually, I'm sorry, I take that back. Not all-time highs, but the highest it's been in years. Let me just go click on the all. Yeah, I mean, who the hell even remembers? This was the big oil boom back in '08, which I remember very clearly, frankly, not to give my age away. But so we got the CRB index, right? This is moving higher. Now, since September, this is up about 16%. So this is it tracks commodities, but the main thing is oil. It's not just agriculturals. All right. Now let's look at, obviously, we typically start off with oil because I think that there are some trading opportunities here in oil. So even if you don't trade oil, don't worry about it because we'll talk about the ETFs that you can use. Now, as we know, a lot of times when something gets to a level that had been resistance, it converts into support. And we could see that right here. And this should really boggle your mind because if you think about how big the oil market is, it's really amazing that it can find such precise levels. I mean, look at, we know things find resistance at former resistance levels. Look at that 77.23, 77.21. Pennies on this $1 trillion market where there's so much going on. We get support at former support levels because of seller's remorse. People sell and then the price goes higher and they're like, oh, if it gets back to my price, I'm going to buy my shares back. So if you get enough remorseful sellers who sold at the bottom going to buy their, well, in this case, I should say futures back, it creates support at the level again. Up here, you get buyer's remorse. People buy and the price goes lower, and they're like, if it ever gets back to my price, I'm going to get out of break even. So seeing resistance at a former resistance level is very common. Seeing support at a former support level is very common. Look at this support level on oil down around 67.30. This goes all the way back to March of 23. So we're going on 2 years now. And that's called market memory. Levels that are important can retain their importance for months, quarters, even years. Now, a lot of times when markets sell off and they get to a level that was resistance, they tend to find support because there's people that sold here. It's the same thing as seller's remorse, but it's manifested in a different way on the chart. People sell and then the price goes higher and they're like, oh, if it gets back to my price, I'm going to buy my oil back. So we get down to there. You got enough remorseful sellers placing buy orders, it becomes support. A lot of times you rally off of support. Why? Well, because support's a large group of buyers, and sometimes the buyers are afraid they're going to miss out. They think someone will outbid them, and the sellers are going to go who's ever willing to pay the highest price. So they increase the price they're willing to pay, and it becomes a snowball effect when other concerned buyers see that. And you got a big kind of reversal day action here. So my guess is that there's going to be a trade here to the upside. And if you don't trade oil, you could trade the USO. But I would say, if you get long and then we get down to about 71 ish, well, that's where you blow it out. You take a small loss. Don't take it off your radar screen, though. But I think considering we have this big move down here, we have this reversal day, it's a good chance we're going to see a little bit upside there. And you can trade this USO ETF if you're not a futures trader, which I know most of you aren't. Now, this looks different because oil is always open, basically trades 24 hours a day, and these are futures. This is an ETF that only trades during New York hours. But for all intents and purposes, this is more than enough. All right. And, I don't know what the hell is going on with Iran and this and that and the other thing. But there's all these headlines today, and this just shows you how stupid the news is. It's like, oh, Trump this, Iran that, Trump that, Iran this, oil up, oil down. Yes, I mean, it's barely moved. I mean, all right, natural gas. One of the first things you got to do if you want to be a good trader is turn off the stupid news, man. Watch the History Channel. Now, here's an example of what could happen, right? We got to a level that was resistance and it became support, and then the buyers outbid each other. Now, I think the trade here is probably over, and you might be like, well, doesn't look like much, but this is a 7% move in 3 days. I mean, that's enormous. If you like natural gas and you don't trade futures, you can hit up the UNG ETF. It's an ETF that's designed to track natural gas. All right, next we're going to look at wheat. I think one of the most fascinating things about charts is you can see the same patterns in charts of different things. And that's because we're looking at the psychology of people. And regardless of what they trade, they have the same emotions. For example, look at this. Here's the wheat market. Look at that. Support at a former support level. Get to support and rally. Get to support and rally. But yeah, you got to shut off the news. You got to, all these experts on TV, I think they actually do people a disservice. I think the main thing that they do that kind of bothers me is they put every little move has to have something to do with some ulterior then. Now, as someone who spent 20 years on institutional trading desks, let me tell you something. That's not how it works. No one sits around and watches TV and is just like, oh, I ran just to this. Oh, let's go buy oil. Most traders have plans well thought out. And not, a little news story isn't going to change what they do. And it's like, oh, the market was up and then President Trump sneezed and the market didn't like it and now it's down 30 basis points. It's just stupid. But look at this. Support at a former support level, resistance at a former resistance level. Now, to me, this looks overbought. To me, this looks like it's probably going to reverse. A lot of times when things get overbought and get to resistance, they reverse. Overbought's going to draw sellers into the market. A resistance level is a level where there's a lot of sell interest. There's an ETF, wheat. Pretty easy to remember this one, WEAT, which again, it's not going to look like the same chart because what we were looking at is futures. And these are open basically 24/7. Whereas this is only open during New York hours. All right, let's take a look at copper. See if anything's going on there. Man, pretty quiet. But again, look at this, right? Notice how we got to resistance at a former resistance level. Notice how we got to resistance at a former resistance level. Notice how we got to support at a former support level. See the same things that we were just seeing in corn and oil and natural gas. Because whether you're a natural gas trader or a corn trader, you have the same emotions. Now look at that. What was resistance became support. Just like we saw before, levels that were resistance can become support. And buyers that created the support outbidding each other caused a rally. So let's go back to oil here. Right? Resistance became support. Potential rally coming up. Copper, resistance became support. Rally underway. Now, I don't think there's really a good ETF. Let's see. I think there's a copper miner. Yeah, so you can get exposure with this. It's not like pure exposure. A lot of people trade on this company if they want exposure. Oh, wait. I want Southern Copper. There we go. SCCO. So, if copper rallies, there's going to be a move here, but I don't know. Just looking back at copper, I think you got some better ideas elsewhere. But it's a good learning lesson. Okay. What's up next? Corn. And look at that, right? Resistance here became support here. It's not a coincidence that this is where this sell-off ended and reversed. It's a former resistance level. People that sold regret doing so, and the level that was resistance became support. When it goes higher, they're like, I'm going to buy my contracts back. You can kind of see that down here, right? Resistance there became support there. All right, so now let's look at coffee, because what I've seen is that it's at all-time highs. And frankly, I hate coffee. I can't stand the smell of it. I mean, my daughter's a coffee addict. My wife is a coffee addict. I mean, it's just as nauseating for me. But anyway, what's not nauseating is making money. Now, so this is kind of an interesting to focus on here. We've had this big move up in Starbucks, right? So so this is coffee and this is Starbucks. My guess, and notice I say guess, is that Starbucks has a lot of coffee futures, or a lot of their product is in coffee, or they have big holdings of coffee. All right. And that's probably locked in by futures. But once that kind of comes to an end, all of a sudden Starbucks is going to have to go into the open market and pay a lot more money for coffee. And I think then there's a good chance it's going to go down. So from a trading point of view, this thing is really overbought. This is really jacked up. And this has to be from people thinking, oh, coffee prices are so high, it's going to benefit Starbucks. As a matter of fact, let's check this out here. All right, so last time Starbucks was this overbought, it was at 113, and a month later it was at 97. Yeah. So that's what I think. So again, people are probably buying this because they think that higher coffee prices are beneficial, because Starbucks probably has a lot of holdings in coffee. But once their futures contracts start to run out and they're going to have to start paying more, then obviously they're going to become less profitable. And yeah, I think that this could go down. But anyway, so that's why this is on my radar screen for a short trade here. If this thing starts to reverse, if it gets below about 108, maybe gets down to about 105, that's where I would consider buying puts. And my target short term would probably be down around 103. So it's only $2, but in options that could be a lot of money. All right. Hopefully that helps everyone. Thanks so much, and I will see you all soon.